In this video, I'm going to discuss about double entry accounting system. Before I move on to the double entry accounting system, let me recap some of the principles I discuss under accounting equation. The main equation we discuss is assets equal equity plus liabilities. Before you watch this video, I would highly recommend you to go and watch my previous video on accounting equation. I have given the link below. So this is the basic equation, assets equal equity plus liabilities. So this equation can be further elaborated. This equation can be further elaborated as follows. Assets equal equity plus profit plus liabilities. Now I have added profit because profit is earned by the owner. So therefore it has to be adjusted against the equity. So this can be elaborated as assets equal equity plus profit plus liabilities. Now further you can expand this equation as follows. Assets equal equity plus revenue minus expenses plus liabilities. So revenue minus expenses is equal to profit. So therefore instead of profit we can say revenue minus expenses. Now by using simple maths, what you can do is you can simplify this equation as follows. Assets plus expenses. So if you want to remove this minus, you should bring to this side. If you want to eliminate minus, what you have to do is the expenses should be brought to the left side. So when you bring it here, it will be plus. Assets plus expenses is equal to equity plus revenue plus liabilities, because the expenses we have moved to the other side. So this is the final equation we derive from the basic equation. Basically there will be 5 types of transaction that will be recorded under these categories. There will be 5 categories, namely assets, expenses, equity, revenue and liabilities. Now let's look at what type of transaction can be recorded under each of these categories. For example, if you take assets, any purchases of assets, motor vehicles, machineries, you can say buildings, purchases of buildings, all will be recorded under assets category. Not only that, cash. If there is an investment from the equity owner, so that also will be recorded under cash. Not only that, when you sell goods or when you provide services on credit to your customers, so which is known as accounts receivables, also will be recorded under assets. So this is also known as debtors. This is also known as debtors. Now let's look at expenses. What type of expenses will be recorded under this category? We can say salaries, electricity, water, rent, insurance. So these kind of expenses will be recorded under this category. Then when you take the equity, only owners interest will be recorded under equity. So initial investment, if there is any additional investment, and also the personal transactions also will be recorded under equity. If the owner has withdrawn cash from the business, or if he has withdrawn any inventory or any stocks, those transactions also will be recorded under equity. So we say personal transactions, we call it drawings. Now under revenue, we will have to record sales, whether it is cash sales or credit sales will be recorded under revenue. And also if you have provided any services, the service related income also will be recorded under service income under revenue. Then what about the liabilities? Under liabilities, you can record bank loans, if you have obtained a bank loan from the bank. Then if you have purchased any item from your suppliers on credit, then it has to be paid on a later date. So therefore it has to be shown as liability, accounts payable, also known as creditors. So all these transactions will be recorded in any one of these categories. Now after identifying these transactions where it will be categorized, now these transactions will have to be recorded somewhere. So where you will record this transaction? So it has to be recorded in some place. So this is known as account. Now let's look at what is the meaning of account. An account means it's a record to keep track of all the transaction. So the format of the account is known as T account. It resembles English letter T. So the left side of the account is known as debit, and the right side of the account is known as credit. So debit, we can abbreviate it as D capital or simple. So normally it is written on the top of the top left side as DR, and the credit is abbreviated as C capital or simple. So it is normally written on the top of the right side, CR, and also there will be a title. A separate T account will be maintained for each and every transactions. For example, for assets, you will have to maintain a separate T account. For expenses, you have to maintain a separate T account. So likewise, for equity, revenue and liabilities, you will have to maintain separate T accounts. So basically, company will maintain many accounts. So this is collectively known as a ledger. Now let's move on to the double entry accounting system. So under double entry accounting system, so each transaction will have a dual impact. So each transaction will impact two accounts. So every transaction should be recorded in two places, in two accounts. In double entry system, every debit entry will have a corresponding credit entry, and also every credit entry will have a corresponding debit entry. For example, if you record a particular transaction on the debit side of the one account, and it has to be credited on the credit side of another account. And on the other hand, if you record a transaction on the credit side of one account, and it has to be debited on the debit side of the other account. Generally, the following types of accounts are increased with a debit. When you look at the assets, if you want to increase the value of assets, you need to debit the asset account. And at the same time, if you want to increase the expenses, you need to debit the expense account. On the other hand, if you want to decrease the value of the asset, it should be credited. And also the expenses, if you want to decrease it, you need to credit. Generally, the following types of accounts are increased with a credit. When you take the equity, if you want to increase the equity value, it should be credited. And also, if you want to increase the value of the revenue, it has to be credited. At the same time, the liabilities, if you want to increase the liability, the value of the liability, it should be credited to the liability account. And also, if you want to reduce the value of any of these accounts, it has to be debited. So if you want to reduce or decrease the value of the equity, it should be debited. Revenue, to decrease, it should be debited. And also the liabilities, in order to decrease the value of the liabilities, it should be debited. Finally, when you summarize the impact on these accounts, we can conclude as follows. So when you look at the assets and expenses, in order to increase the value of these assets and expenses, you need to debit. You need to debit the assets and expenses account in order to increase the value of the account. And on the other hand, to increase the equity value or revenue value or liabilities, you need to credit. You need to credit those accounts. Whereas, if you want to decrease the value of any one of these accounts, you need to credit. To decrease assets value, you need to credit, and to decrease the expense value, you need to credit. Whereas, to decrease the equity value, you need to debit. To decrease the revenue value, you need to debit. And also, you need to debit the liability to decrease the value. If you want to watch more videos on double entry accounting system, please subscribe to my channel, and also don't forget to comment below. Thanks for watching.